Welcome back to Investing Talk podcast. Today, we're taking a close look at Shoals Technologies Group.
That's right. And our mission here is really to unpack what's going on with Shoals. We're looking at recent analysis, their due diligence report, and some updates from, I believe, May 2025 on growth and global expansion.
Okay.
So for you listening in, if you want to get a quick handle on investment opportunities, understand them thoroughly, we aim to give you a solid picture of Shoals' standing, its potential, and maybe a few things to, keep an eye on.
Okay, let's get into it. Shoals.
Yeah.
They're a key player in solar energy, right? Focusing on electrical balance of system, EBOS.
Mm-hmm.
Now, if I'm picturing solar panels, what exactly does EBOS cover? What part of the setup is that?
Good question. It's basically everything except the panels and the inverters themselves. Think of it as the electrical plumbing, maybe. It carries the electricity generated by the panels safely and efficiently towards the grid.
Ah, okay.
Okay.
The plumbing. I like that.
Yeah, so things like cable assemblies, fuses, combiners, disconnect switches, even wireless monitoring systems fall under that umbrella. Junction boxes, enclosures too.
So all the crucial connection bits. And I read something about a plug-and-play approach they pioneered. Sounds innovative.
It really is. That's kind of their main differentiator. The big idea is to make installation faster and, crucially, cheaper.
How does that work?
Well, they use these push connectors quite a bit. It simplifies how everything links together. So you don't always need, say, a master electrician for every single connection point.
Right. Opens it up to more workers.
Exactly, which means lower labor costs, faster project times. And their main product there is the big lead assembly, the BLA. It bundles several functions together, connections, circuit protection, that sort of thing.
Okay, so it integrates things. More reliable, maybe?
That's the idea. Fewer separate components, fewer potential points of failure, plus the cost and speed benefits. And they're not just sticking to solar panels, are they? They're moving into batteries, BESS, and OEM parts.
Yeah, diversifying, which makes sense. They're expanding into battery energy storage solutions, BES, and also into the commercial and industrial space, C&I, plus supplying components to other manufacturers, the OEM side.
Smart moves. Let's talk performance then. Q1 2025, how do they do? Sounds like there was some positive news.
There was. They reported revenue of $80.4 million for the quarter, which, interestingly, was actually higher than they'd guided for.
Okay, so they beat their own forecast.
And looking forward, their backlog and awarded orders, that pipeline of future work, grew 5% year over year. It's sitting at $645 million now.
That's a pretty solid number.
Yeah.
Shows decent demand.
And that diversification we mentioned, it seems to be taking shape. There's a big collaboration with UGT Renewables.
Yes, that's a major one. Aiming for up to 12 gigawatts of solar projects, primarily in emerging markets. Huge potential scale there.
12 gigawatts. Wow.
Yeah. And their partnership with First Solar is still important too, especially for those really large utility scale projects.
So with all that positive news beating expectations, the UGT deal, I imagine, the market took notice. I saw the stock jumped a bit in early May.
It did, around 7.6% on May 7th following those announcements. And at least one analyst bumped up their price target to $5. So definitely some positive sentiment building there.
Okay, but let's temper that slightly. Digging into those Q1 numbers, you said $80.4 million revenue, beat expectations, yes, but how did it compare to last year?
Good point. That's where it gets a bit more nuanced. While they beat their Q1 guidance, that $80.4 million is actually down 11.5% compared to Q1 of 2024, when they did $90.8 million.
Okay, so a year-over-year decline. And what about profit?
They reported a small net loss, very slight, negative $0.3 million.
A loss. Okay, but didn't they also report positive adjusted EBITDA? How does that square?
Right. Their adjusted EBITDA was positive, $12.8 million. So that suggests their core operations, stripping out certain items like interest, taxes, depreciation, amortization, maybe some one-off costs. Those operations are still profitable.
So the underlying business is making money, operationally speaking. The net loss might be down to other things, maybe investments.
Could be. Investments in growth, R&D, maybe costs related to that international expansion or entering the BESS market, or perhaps some non-recurring expenses hit the books in Q1.
And what are they projecting for the full year?
Their guidance for full year 2025 revenue is between $410 million and $450 million, which, suggests they expect things to pick up compared to that Q1 run rate.
Okay. What about earnings per share?
Adjusted diluted EPS for Q1 was 0.03 cents. That's down from 0.07 in Q1 of the previous year. So again, reflecting some pressure compared to last year. even with the positive adjusted EBITDA.
Okay, let's try and summarize. What are the real standout strengths for Shoals right now?
Well, number one has to be that innovative plug-and-play tech. It's a clear cost saver for customers, especially with labor being tight.
Big advantage.
Definitely.
Yeah.
Then there's the strong backlog, that $645 million figure, giving them visibility on revenue. The diversification into international markets, BESS, C&I, that opens up big growth runways.
Strategic partnerships too, like UGT and First Solar.
Absolutely, expanding their reach. And as we discussed, that positive adjusted EBITDA shows the core business is fundamentally healthy.
Got it. Now, on the flip side, what are the potential red flags or things to watch?
Well, the small net loss is something to keep an eye on. Does it signal margin pressure, or is it just those growth investments we talked about? Need to see how that trends.
And the year-over-year revenue dip in Q1.
Right, was that a blip or something more persistent? Also, their gross margin is tightened a bit. It used to be near 40%, now it's around 35%.
35% gross margin, still decent, but why the contraction?
Competition. Costs.
Could be a mix. Maybe raw material costs went up, or supply chain issues linger.
Yeah.
Or perhaps when they enter new markets, like internationally or in BSS, they're pricing more aggressively initially to gain footing. That can temporarily squeeze margins.
Makes sense. So monitoring those margins going forward will be key.
For sure.
What about the overall market feeling? The sentiment around Shoals seems pretty positive lately.
Generally, yes. The recent news flow has been good. The UGT deal beating Q1 guidance. CEO commentary has also been upbeat about the order book and growth prospects.
And they stand out from competitors mainly because of that plug-and-play system.
That seems to be their main unique selling proposition, yeah. In a crowded renewable space, offering lower installation cost and time is a powerful differentiator. While there are competitors in EBOS and storage, Shoals positions itself as the innovator simplifying things.
And those margins, even at 35% gross, are considered okay for the industry.
Mid-30s gross margin and pre-tax profit margins, sometimes cited near 18%. Yeah, those are generally seen as pretty favorable compared to broader industry averages in this space.
Looking ahead then, what are the big catalysts or developments we should watch for?
Definitely continued execution on international expansion, especially getting those UGT projects moving. Plus, deeper penetration into the C&I and BES markets. Those are the growth drivers.
Risks.
Standard stuff for this sector, really. Changes in government policies or incentives for renewables could always impact demand. And supply chain issues or rising material costs could continue to pressure those margins we talked about.
But the international push seems real. You mentioned a figure for their backlog.
Yeah, international markets now make up about 13.4% of their backlog.
Yeah.
So that shows the diversification strategy is actually starting to bear fruit. It's not just talk.
Okay, so wrapping this up for someone listening, what are the main takeaways on Shoals Technologies?
I'd say you're looking at a company with some really neat, potentially cost-saving technology in a sector, renewables, that's clearly growing. Their backlog is strong, suggesting demand is there, and they're making smart moves to expand beyond their core U.S. utility-scale solar base.
But there's always a but.
But yeah, you need to watch the financials closely. That recent revenue dip, the small net loss, the margin tightening, those need monitoring to ensure they can maintain profitability as they grow and scale, especially internationally.
And that international growth, particularly in emerging markets via UGT, it's exciting, but maybe adds another layer of risk.
Exactly. Huge potential upside from tapping into those fast-growing markets, no doubt. But it also brings risks related to, economic conditions, political stability, different regulatory environments. It adds complexity compared to just operating domestically.
This has been a really thorough look. If someone wants to go even deeper, where should they look next?
Well, the best place for the real nitty-gritty is always their official filings with the SEC. The quarterly 10Q reports, the annual 10K, they contain the detailed financials and management discussion.
Right, the source documents.
Yep. And their investor relations website usually has presentations and transcripts from earnings calls, which can give you more color and context from management.
Great stuff. And if you, listening, found this insightful, please do subscribe, like, and maybe leave a comment with any questions you still have. We appreciate the engagement. And maybe a final thought to leave you with. Think about how the accelerating shift towards electric vehicles and the need for grid stability might create even more demand for battery storage, potentially boosting that side of Shoals' business even faster than traditional solar EBOL. Something to chew on.